Hello folkies, so we're gonna look at some charts today again, because that's been my thing lately, is looking at charts, thinking about them. So this is VALE. I have no idea what they produce or anything. I've just been using this as an underlying for selling covered calls. It's been an interesting ride down, actually, but that's okay. The 2 weeks that I've held on to it, I've sold 2 sets of calls, and the most recent set is going to... Actually, I bought it back today for $2, so I made something like $11, something like that. Even less because of commission. I don't know. Actually, they don't charge commission. Trade King does not charge commission if you're short an option and you're buying it back for less than 5 cents, meaning $5. So that when I bought back that $2 or 2 cent option on VALE, it was actually only $2.04. Was the total cost of the transaction to do that. Although I did have to pay commission, the $4.95 plus 65 cents contract on actually selling the option. So that ate into the profit that I gained from the premium, which wasn't that much. Definitely didn't make up for this fallen price of the underlying here. And I'm not really... I'm not seeing it going up anytime soon either. Even though the RSI is, or the averages are still in what I would consider the green zone, the bullish zone. So this could actually be just a correction, and it's going to keep going up, trending upward. This is a maybe right here, you know. Actually, I haven't drawn this line before, so if you draw these 2 lows here, touch it, I could see it reacting to that trend line. So something like here. You could see that, right? It's a possibility. This would create some support. Didn't think about that before just now. But before saying that, I probably would, if I was forced to take a position at this point. I said, okay, either short or go long. At this point, I would probably short, because we have the same sort of. Actually, I think I might have. Oh, I don't have anything hidden. Huh. Let me set up a Fibonacci retracement real quick, because I am not sure. Okay, yeah. There is a retracement line there. Oh no, wait, that's just a support line I drew. Let's delete these. Let's delete that too. There could be support here. I don't know, guys. This is actually, I shouldn't do this. I should restart this video. Okay, I decided to actually continue the video the way I was doing it, because why not? Maybe you're interested in seeing how I think about things as I'm analyzing a chart. I didn't really jump into this very prepared on this one, or I'm not sure if any of them I'm very prepared. Either way, let's take a look at the fan here. Yeah, you could see it even, I'm seeing a possibility of going up from here. Slight possibility. Part of me is still feeling, oops, the the downtrend is strong in this one, possibly down to this level right here at 632. But nothing too definite. It just, this is crossing down into the bearish zone. If it crosses back up, then I would say I would feel more long than bearish. So that's an important part. This RSI line here, the raw one, which is this purple color, when it crosses up above the 45 line here, this is just an RSI with a couple moving averages, so nothing fancy. I added the background bars here to sort of create zones in which, if the RSI is spending a lot of time there, you know it's in a bear market. So if you even look here, you see up in here, bullish, pretty bullish from here to here, especially over here. But as soon as it crosses down over here, you're in a bear trend here until it crosses back up. Good. Crosses down, bear trend up. So you can sort of see what's going on here. Let's turn off these. So we just went up, we're going down. We could actually bounce right off of this, since RSI just crossed down right here, and we haven't got any confirmation from either of the moving averages, which was 14 and 18, I believe, or no, 18 and 9. Yeah, the slow moving average is 18, the fast one is 9. So yeah, that's a really cool thing about TradingViews. You can actually modify the indicators with their real simple Pine script. Volume oscillator, I don't know, I wasn't really using this too much, so I'll just close that off. Anyway, next chart, TLT. This is an ETF that follows U.S. Treasury bonds. Yeah, here we go. 20-year plus Treasury bonds. This one I'm still feeling, I would feel short on until this level right down here. So if I was going to set up a short trade, it would be like this, but I'm not actually feeling like making that trade. Actually, if I were going to make this trade, I may have to think about actually doing this, but I would want to, because I've never shorted stock before. I've bought puts, that's about it. That's the only time I've played like stocks short, is through a buying of a put contract. What I would do is check and see how much a call option is, about like 1 or 2 months out. Buy the call option that's at the money or just like slightly out of the money to get it sort of cheap, and just like define your risks. So maybe even buy that call option where the strike's like 119.50 or 119, or I guess, yeah, no 120, yeah, 120, because they get cheaper the higher they go. Anyway, buy one call option there, and then short how much ever stock you want. Like if you buy one call option, of course you do 100 shares, so just buy insurance on those shares. So if the stock goes up, you can just use those options to call the shares at the price that you've shorted them, and you would come back with just the loss of the premium that you paid for that insurance, the call option insurance. You dig? So that's how I would set up this trade, because it's actually, you've got it going down here once, right here, bam, and then the fast moving average confirms, and then the slow one confirms all the way down here, and we're still falling. So here I could see it, or if you wanted to get another signal that it's in a downtrend, is if these, if the RSI moves up to the 45 line and actually finds resistance there, like it crosses up, crosses down, or even just hits it and bounces down, then that would be a good confirmation. Sort of like, see this area right here, where it goes down, it goes up, but it breaks down straight through it again, over and over again. It's just trying to get through. So we were sort of in this situation here, almost. Except for it's gone down so much so fast. This one, it just went down to the middle line and just sort of bounced around there. But this one's all the way down at the bottom. So it could actually, you know, let me see if I can find an example back here where it swings all the way, like going from major high. Oh, see, there isn't too many examples of it going from the major high all the way down and swinging all the way back up. It's sort of, you know, you cross down into here and it sort of has trouble getting back up. It downtrends for a while after it breaks through this 45 line on the RSI. See? So that's what makes it sort of interesting. Well, it's interesting for me to think about using these this data here and feeding it into a neural network of some sort and having it output some sort of trading signal. I'm not sure, like having it output a percent move or like output, its best guess is like, I think we're currently in a uptrend or downtrend. I don't know the best way of setting up the whole system, you know. Anyway, that's my perspective on TLT. Let's go on to BBEP here. Real proud of my call here on the top. I actually exited my position. I got in here around 603, I believe. After this momentum, it broke through one of the moving averages. But yeah, maybe it was the 10. I saw it break through the 10, and I was like, okay, I think that's a good idea to get in now. So I got in. Didn't get out here, didn't get shaken out here. But then when I saw, what did I see? I think there was a larger Fibonacci retracement set up somewhere. Yeah, here it is. Oh wait, is that it? Yes. Let's turn off this littler one. Littler one. Yeah, here we go, I think. Something like... Oh, I set up... Huh. Well, I guess it's... I don't know. Anyway, we've gone over this chart before. And it's still going down. I know these two levels are reacting to Fibonacci retracement from here and here. See, directly on the 61.8 at the 622 level, you got a green candle here, and at the 602 level, green candle. It went directly down to here and reacted immediately on the 582, or on the dot, you know. That was pretty neat to watch that one day. I was like, oh man, this is the time to buy. You know, I was thinking about it. I was looking at a smaller time scale though. I said, oh man, there's a good signal to buy right now. And my friend was like, so soon? And then I looked at the one-day chart and was like, you're right. It is pretty soon to buy in. You gotta wait for a confirmation from the longer time period, because we were still in the we're still underneath the moving average. See, I was looking at the moving average, and I was going to wait for it to catch up. What might be a good idea to start looking into and using is like a triple EMA average. I don't know, let's do 21. Let's change the style, make it fatter. Let's make this bright pink. So like with the triple exponential moving average, it reacts a lot faster. So like here, you know, it went underneath it. I could have bought there, and see, it actually stayed up, and then I could have sold. I would have sold right there if I was using it. Bought again right here, sold again immediately right here. So it creates a lot more signals than the simple moving average. What you could do is look at where the triple exponential moving average crosses up the moving average. So I wonder what would happen if you just set them the same. So you guys, see, I'm just speaking my mind here. Go here, see, you get a signal right there to buy, but it's like a perfect cross back down right there. So it's like buy, sell. And then here it would have been a nice buy right here, buy, and then it bounces right off here, and then sell right there. See, that's a pretty good. That would have been a pretty good indicator to go off here. So maybe I will leave it, you know, both at 10, and then when the T EMA crosses up over this, I'll use it as another confirmation of my thought to buy in, if it ever happens. Anyway, now on to the next one, Broadcom. This is we're using a line chart instead of a candle chart here. And this is forming a nice rising ascending wedge pattern. I don't really trade off of these, but I just noticed it. I was actually, I think I explained in a previous video, I was trading off of this resistance line before. So I'm hoping this gets rejected soon, and it would be nice if we could get it to just do that, of course, you know. That's hopium, though. What we really want to look for, if you don't have a position, like, what I would be looking for is a break up or down out of this. These ascending wedges are biased towards a bearish break, from what I've read, so this is a nice pattern for my current short position. So we'll cross our fingers that we don't get another, or we will cross our fingers that we get another LL, but downwards, not upwards. And now we have this, which is another underlying that I've been using to sell covered calls because the volatility has been crazy on it. And so it's been bouncing in this, doesn't look like an ascending wedge. It doesn't look too symmetrical either. It's like it might be a ascending triangle. These are pretty close. If you could totally make a resistance line up here that would be flat, you know, like this. Yeah, we'll even use that as the first bounce there. And this could be the triangle line. So this would be an ascending triangle, which is bullish. It's biased towards a bullish break out of here. But yeah, if you aren't looking to create that pattern so tight, I could see it even falling a bit more before it reacts to any sort of resistance. Something like that, maybe, where you have up, down, up, then here, here. It might tighten up. You know, you never know. You just have to keep watching and seeing how it reacts to the patterns that you are seeing form. Like, here's the MACD here. Cross up here. It's been creating good signals for this, for trading inside this wedge. Cross down, even cross up here. So we start small by this raw signal here. Sell off of this one indicator. Buy, or one way of interpreting it, sell, buy, sell, and you can see how the histogram here, oops, I want to use maybe arrow, it's it trends, you know, it goes opens up, maxes out, and it starts heading down the other way, so you can actually predict this crossover by looking at the histogram. Hopefully that wasn't too slurred. You can predict the crossover by looking at the trend of the histogram, so you can see it's peaked out here, so this may already be a buy situation right over here as it compresses and goes upwards, hopefully. Well, not really. Either way, I'm just selling calls, and I've been doing it weird too. Normally you sell, like you buy the stock and you sell the call out of the money, like a strike out. But for MCP here, actually, since it was up here when I got it, and I saw that there was this resistance, I decided to sell like deep in the money calls. So I sold 50-cent calls when it was at like 88 cents, which is weird, I guess. But then again, so I collected like $100 premium because of the difference. There's like a 30-cent difference there, and so as the price went down, I was able to buy back that call for a lot cheaper than before, and I was able to resell for next week another call. So that's what I've been doing on that, and that's it, guys. That's my charts. Yeah, and yeah, this is sort of a neat indicator that I've learned from this book I've been reading called Technical Analysis for the Trading Professional. Like before, I was just using RSI as an oversold condition indicator, where it's, you know, if it's above 70, you know, I'm saying, you know, if it's above 70, it's a overbought signal, so it usually signals the time to sell. So like right here, you can see it breaks, RSI breaks above, and it does a good job. See, it's like if you sold right there, if you shorted right there, and had the proper stops or trailing stops or target set somehow, you could make money if you knew to get out there. But with this way of looking at it, it creates these bull and bear channels, which is a way I'd never looked at RSI before. And so I added a moving average to sort of smooth it out, and so you can see more of where, you know, you get these get the RSI oscillator to sort of just chill in. Yeah, like look at this. This is great. Like right here, just bouncing around that middle one. So I guess that's sort of like neutral, you know, and it's really bouncing around the middle. You see it flatten out there, and then now it's bouncing around in the bottom part. So now it's traveling down. So when it's up here, it's more neutral. That's sort of neat. It's not like a major uptrend, but just like a little bit, sort of flattening out there. It's going up. And see, there you go. That's a nice ascending wedge pattern forming. See, and then you have that break down out of that pattern. It's a very slow break though. Like normally you don't want to see it break faster, but just sort of piddles down out of there. So the tiny one, and here's a big one, so down. Yeah, see, it's almost a fractal. See, it goes pew, 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 pew. So that perfect V, pretty close to, nah, it's a little bit higher right here. Yeah, so there, little scoop, flattens out a bit. And then it goes down. Now it goes up. So if it's a fractal, it'll look like this. Let's see here. Oh darn it, I moved it over too far. Let's see if I can remember. Down, flattened up. Up. And then down. And then whoops. Something like that. Yeah. Anyway. There's some chart talk, guys. Have a good one. Bye.